Historically, the stretch between September through to December, this has been considered one of the most lucrative periods of the year for commodity traders. A long list of Wall Street banks, from Goldman Sachs to JP Morgan to Bank of America, they have described the current economic climate as the golden age of trading. This comes as no surprise given that the current highly macro-driven backdrop that is fueling one of the greatest wealth transfers the world has seen. This, of course, presents savvy traders with back-to-back money-making opportunities. Last week, the commodity markets, they recorded a net inflow totaling more than $900 million. That's the biggest inflow into commodities ever recorded in a single week, and this could just be the beginning. Traders are pumping more money into commodities at one of the fastest paces ever seen. This is to capitalize on the biggest macro themes driving the markets right now. Everything from re-accelerating inflation to the de-dollarization movement to an escalating global food crisis, which is sending agricultural prices skyrocketing to all-time record highs. And just in case that wasn't enough, traders, they're now on the cusp of being gifted with even more money-making opportunities with the return to the global energy crisis 2.0, which has flared up again after crude oil, gasoline, and European natural gas prices, they surged to the highest levels seen this year. This cocktail of explosive events, which traders will not want to miss out on, this is guaranteed to be a license to print money and drive the market sentiment over the next 120 days. In fact, Goldman Sachs, JP Morgan, Bank of America, they have already begun prepping their clients for what they predict could be one of the most lucrative periods of the year. So if you've been kicking yourself for missing out on some of the biggest trading events so far this year, and you still want to make 2023 your best year yet, you've just been granted the ultimate opportunity. With global inflation ticking higher once again, it's no surprise that commodities, they've firmly positioned themselves as one of the best performing asset classes of 2023. Official data released last week that showed US inflation accelerated at a scorching pace in August for a second consecutive month. That adds yet another layer of complexity to the Federal Reserve's effort to bring consumer price pressure down to its 2% target. So there's no surprise for guessing what the huge spike stems from: rising food and energy prices. The Consumer Price Index, which measures the price of everyday consumer goods, including gasoline, healthcare, groceries, and rent, that surged by 3.7% in August, and a significant increase compared to July's reading of 3.2%. More than half of that monthly increase, it came from a sharp jump in commodity prices, which is no surprise given there's a strong correlation between commodities and inflation. When commodity prices accelerate at a red-hot pace, so does inflation. Energy prices across the board, they've been on a phenomenal run this quarter, breaking records and notching up fresh 2023 highs. Last week, WTI crude oil traded as high as $90.88 per barrel, tallying up a whopping gain of 41% since June. Meanwhile, Brent crude oil prices, they rocketed back above $94.63 a barrel to hit fresh 2023 record highs. Over the last 3 months, the world's most traded oil benchmark, that's been racking up a stunning gain of over 49% from its 2023 lows of $63.64 a barrel. And the rally might not stop there. Over in the United States, gasoline prices, which alone make up 8% of the CPI, they've been on the rise this month, with the average price of a gallon of gas sitting around $3.86. That's the highest price for this time of year and 60% higher compared to when President Biden entered office in January of 2021. Economists, they now predict prices could hit $7 a gallon by the fourth quarter of this year. Elsewhere in the energy markets, European natural gas prices, they've been on an absolute tear, racking up double-digit gains on a consecutive weekly basis to reach levels not seen since last summer. European natural gas prices, they're currently 6 times higher than they usually are for this time of year, trading at the equivalent of more than $600 a barrel of oil, and we haven't even entered the winter months yet. As a result, 30% of the world's highly essential industrial metals, from aluminium to copper to cobalt to nickel to lithium to palladium to platinum to uranium to zinc to rare earth metals, they have been offline, opening the door to major squeezes in prices ahead. With conclusive evidence showing that a second wave of inflation is on the way, The big question now is, will the Federal Reserve skip, pause, or hike interest rates again this month? The answer to this question may come from the hotly anticipated FOMC monetary policy meeting on September the 19th through to the 20th, ultimately positioning this meeting as one of the biggest events of 2023, which traders will not want to miss out on. Extraordinary times, they do create extraordinary opportunities, and right now as traders we are living in some of the most exciting and rewarding times ever in history. As we transition through the final 4 months of 2023, we are firmly in one of the most highly lucrative event-driven periods of the year. And of course, if you want to successfully navigate the markets and capitalize on these huge money-making opportunities to build substantial life-changing wealth, then you need to utilize a professional research-driven approach. If you know how to connect the dots and position yourself in the right place at the right time to capitalize on the huge money-making opportunities that are currently unfolding, then you'll make a fortune and build substantial life-changing wealth. Banks, hedge funds, they're making multi-billions capitalizing on the week-to-week macro-driven opportunities, and it's not so different for our clients at the Gold and Silver Club. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they've already made in excess of 6 and 7 figures so far this year, and we still have another 4 months left to go. In fact, all of our clients have already been fully briefed, prepared, and ready to make the final 4 months of the year the biggest and best yet. If you've been kicking yourself for missing out on some of the biggest trading events so far this year, and you still want to make 2023 your best year yet, then go to jointhegoldandsilverclub.com now to learn how a mentorship program can take your trading to the next level. Time is the most valuable commodity that we have. Make sure that you don't waste it. So with that, let's move over to the charts and we'll talk you through exactly what we look at here as we go into a new week. First of all, I just put on your radar Palladium. We discussed this at the start of our session last week with you on the week ahead commodity report. We've seen a 500-point pump to the upside with Palladium since we discussed that with you. Massive buy opportunity back at the $1,200 per ounce zone. It's very similar to platinum here. Every retest that we see on platinum back down to $900 per ounce or lower, it's a massive buy opportunity. We managed to sniper in with platinum on our long at $899 for our best price last week on platinum. Already on Friday, we were able to bank over 300 points on that position and benefit from the whole sell side as well. So platinum broke down in our favor, 800 points over September. So we had a lovely sell short at 976. We, in fact, on Friday, we banked all of that sell short and then we reversed position last week and went long as well around that 900 zone. So that's worked out perfectly for us. Again, opportunities to trade this market both ways. Lovely sell short to capitalize on over September, reverse position, back areas of liquidity at $900 per ounce or lower, and that's been a lovely pump already. Same situation with Palladium, right? So again, every retest that we're getting down towards 1200s, lovely buy opportunity. In fact, quite a few of you have messaged and commented that you managed to get this sniper entry on as well. So well done. If so, we've already banked 500 points on one of our Palladium positions here with our clients last week. It was a lovely pump, right? Moving over to the metals. So what we've done here on the metals, as you know, we've been shorting from 1945. That trade remains up over 200 points at the moment. We did take the opportunity last week to start banking some profits when we broke back down towards the 1900 zone. That was a lovely opportunity to lock in 50% of our sell short. However, we've also reversed position back down here during our live trading room. In fact, last week on the Thursday at $1,909 for gold here. So that trade has pumped quite fast actually over Thursday through to Friday here as well. So we're just keeping the sell short on at 1945. That position is fully protected. It's up 200 points, bank 50%, but we've also gone long here as well, back at the lower end of the channels here. So we got our best entry at 1909 on the long side, and that went into profit on Thursday through to Friday off the back of positive data which came out on China overnight from Thursday through to Friday. That was the same on silver. So we managed to sniper in here as well, getting our position on at 2265. Right now we've got silver which is back at 2308. As you know, we were selling short silver from 2450. Same situation as we've seen on platinum. Sell it as we moved into the month of September. That's broken down 200 points in our favor. We've in fact taken the opportunity now to lock in 75% of the gains there and also get a long position, as I mentioned, at the 2265 zone. So that's been really nice. Both trades are essentially in profit right now. I would look at over the course of this week potentially further opportunities if silver, for example, was to dip back down towards areas of liquidity here again. We've obviously got the FOMC statement on Wednesday. This can be a major catalyst for volatility. I do see silver as a buy now as we head certainly into October. However, the idea being that you want to get the best possible price. As I mentioned, we've already sniped in on this trade last Thursday, and that's been a lovely opportunity to capitalize on. Bear in mind as well, we've seen the usual play here with the dollar over September so far. We remain long the dollar with 108 as our profit target. Previously, we had 105 as our target, but we've extended that profit target because we've still got quite a few risk-off events left for this month and the end of quarter profit taking right to the end of this month as well. If you have a look, for example, the impact that we saw across the markets on quad witching on Friday, you got the S&P 500 that did tank, you got NASDAQ that tanked as well. Copper sold off on Friday into quad witching. That was also similar here with gasoline. We got a tank on that into Friday's close, and that was similar as well with heating oil, which is continuing that momentum lower. As it relates to oil at the moment, you've essentially got right now a situation where you've got 91% of hedge funds and money managers who have a position on oil. They are long. This trade is very overcrowded on the long side here, and it wouldn't take much if you did start to pull back here to at least get profit taking in the lead up to major news items over this month. And of course, you're very likely to see end of quarter profit taking, given that oil is currently trading at the highest level of 2023 so far. These funds, where 91% are long, will need to start taking some profits between now and the end of the quarter here. So the setup is there. And of course, you know how it goes with the markets. They take the staircase up and then, of course, they take the elevator down. So I definitely have oil on the radar at the current levels where we are right now. It's not to say we can't go higher, but the trade on the long side is very overcrowded at the moment. And of course, whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to really take action to give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions, and most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that don't work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis and outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already massively stacked up against you. If you want to change your results, then you have to change your thinking. If you want to learn our exclusive research-driven approach that is never taught to retail traders and only reserved for professional traders in the banks, the hedge funds, who have access to powerful game-changing insights, including where the banks and hedge funds where they're buying and selling in real time, understanding the key liquidity zones so you can enter and exit the markets with pinpoint precision, alongside understanding the fundamentals, the macroeconomics, the capital flows, and the daily, weekly, monthly, and quarterly real-time data-driven cycles, the intermarket correlations and ratios, then you need to join our mentorship program. As we head into the final quarter, we are in one of the greatest eras of wealth creation that the world has seen. If you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, then there's no better time than now. If you want to upgrade your income, then you have to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our Private Members Academy website, and also support and one-to-one mentoring. For more information, just go to jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will get in touch with you ASAP.